Ladies and gentlemen, I know it's been an exhausting morning and the brainstorming would have left you a bit tired for the moment, but we'll take a short break for lunch. Please do come back. We'll see you in about an hour from now. Enjoy the lunch and the refreshments. See you later. Welcome back, ladies and gentlemen. I hope you've had a nice, scrumptious lunch. It's the part of the day which we popularly call the graveyard shift, but I assure you it's not going to be that boring because we've got a very enriching and entertaining afternoon that'll surely keep you awake. So moving on to our next session of panel discussions, and the topic this time is the future of fintech's post-funding winter. May I introduce our distinguished panelists for this round of discussions. With us this afternoon, we have Mr. Nirav Choksi, co-founder and CEO Credable. Give him a big hand, ladies and gentlemen. I invite you on stage, Mr. Choksi. Come on, ladies and gentlemen, please put your hands together. Yeah. Okay. Mr. Srikanth Subramanian is CEO Kotak Cherry. Please put your hands together for Mr. Subramanian, ladies and gentlemen. Mr. Piyush Somani is founder, CMD and CEO, ESDS Software Solutions Limited. A very warm welcome to our eminent panelists and experts. To moderate this round of discussions, I'd like to invite on stage Professor Nilesh Gupta. He is Assistant Professor at IIM Nagpur. Welcome, Mr. Gupta. Please give him a big hand, ladies and gentlemen.
Welcome all. As the host clearly said, this is the graveyard shift. I really hope that our discussions among ourselves and your questions do not make it so. I am really pleased that you have come here to listen to us talk about this very interesting phenomenon that we have observed in the past few time about the funding winter in fintech. Now, the fact that we are in a funding winter is not a question of discussion or argument at all. If we see the data, it's quite clear about the kind of impact that we have had. For example, in the calendar year 2022, the funding for fintech startups has fallen by 27% to around 5,650 crores. The number of rounds have fallen by 29%. Out of this, the most impacted has been the late stage deals, which have fallen from roughly 830 crores worth in the previous calendar year to a 56% low of roughly 370. Keeping on with the trend, the fintech industry, which was minting unicorn after unicorn in the previous year, had seen roughly 13 odd unicorns. And as an expression of the unlucky number, this calendar year we have just 4. Number of, not just unicorns, the number of rounds of greater than 100 million have halved from 26 in the previous year to 13 this year. So then, guests and panelists, it's no question that things are not as rosy as they were last year. And frankly speaking, I don't think we can do much about it as owners of businesses. There is not much that you can do about the external environment. But the main challenge is, the main question is, how are fintechs responding to these, to the funding winter? I would like to ask Nirav to answer this question. How have fintechs in general and how has Credable been responding to these challenges?
First of all, thank God I'm not a unicorn, right?
Sure.
Or wasn't one in the past. But yeah, I mean, look, it's the truth. There are challenging times right now for mid and late stage businesses to go and attract significant amount of capital. And I think the challenge has been exacerbated because of multiple things, right? You've had global equity meltdowns, you've had post effects of pandemic, you have a global macroeconomics which are playing against you, and then that's spooking investors globally. While that That being said, on one side, I mean, if you think about all the PE funds and the venture capital funds, they are sitting on record amounts of money. So sooner or later, they will have to deploy that capital into meaningful companies. So I think the fundamentals of any sound business shouldn't have changed, whether you have had a funding winter or you have had a great runway with money. And I think that's the bright side of this whole equation in my view. Because now businesses, including fintech companies, will start realizing and focusing on the metrics that really matter, which is profitability, sustained growth, governance, things like that. I think and companies who are demonstrating market leadership, growth and profitability in the segments that they operate, whether they are fintechs or not, will always attract quality investors and quality investments. So I think that's what Credable continues to focus to do, and I think any sound entrepreneur would focus on that. These swings, these ups and downs we've seen happen multiple times now over the last 20 years of my entrepreneurial journey. So it's not something that is the new or the first time it's happened. And this too shall pass, and no one can predict when. But as long as businesses focus on the right metrics and growth, customers, etc., they'll always create value.
Srikanth, you started, the Kotak cherry started right in the midst of the funding winter. Were you waiting for this?
No, nothing like that, but I must agree wholeheartedly with everything that Nirav mentioned. So look, funding winter is real. I think there's no doubt in that. You said it, Nirav agreed. But funding winter is no different than what we are seeing in public markets as well, right? Ultimately, private markets in India have been is a fairly young sort of an industry. It's the first time that private markets, early stage investing, ventures are seeing this kind of challenge. In some sense, it's healthy. As Nirav mentioned, that some of the questions that were being asked will change. The focus will shift from valuation to value. If every question was being asked on what is the next round up valuation, now the questions are being asked in terms of what's the value for customer, what's the value for shareholder. We also saw what easy money did, right? What easy money did is sometimes when a feature or a product or a service is not even worth talking about, was taking front page Economic Times ad or front page pink paper ads. I was seeing some time back people taking out ads of saying that we've created risk profile. No, risk profile is there for 20 years. Just because you created an avatar around risk profile doesn't mean that you're going to penetrate deeper into Indian markets. So I think what will start happening is deeper questions around what will genuinely change the way investors behave, what will genuinely change in terms of how customers benefit. Questions are being asked around that. I think all of a sudden performance marketing is a dirty word. 6 months ago, it was all about customer acquisition and performance marketing. So I think this cleansing is genuinely very healthy. But also at the same time, it's extremely important to note that I don't think we should rush to write obituary about funding winter sort of taking hold of some of the early stage companies, because India is seeing a Silicon Valley moment. What Silicon Valley saw about 20 years ago, India is seeing it now. Anything that can help companies create innovation, create jobs, is the only savior for us as a country which has got such rich demographic dividends. So I think the truth lies somewhere in the middle. We are going through a phase where people are asking 3 extra questions before they are putting in money. But as Nirav mentioned, there's no dearth of money. People are sitting on truckloads of cash. They are just being cagey that should I invest in this company? And from metrics of just being top line driven, they are moving more to value driven. And I don't think for us it is about waiting or not. I think because we come from a value oriented foundation, we were never about creating performance matrices the way it is meant to be. The whole point is if all of us can combine ourselves to create responsible innovation, things which genuinely lead towards financial inclusion in every sphere, I think we've done our job. So I think this funding winter will soon pass, and you'll again see spring bloom.
Good to know, good to know. You mentioned something about investors asking 3 extra questions. I'm pretty sure both of you would, you would be going to investors to pitch, or you might be acting as investors in startups yourselves. So could you give an example of these 3 extra questions that you are asking today, which you probably wouldn't get asked or would ask a year ago?
So, Nilesh, I in fact wrote a piece recently in Economic Times op-ed that ultimately building sustainable business is not just important for shareholders, but it's also important for your end customers. Because if you keep burning cash without a possible runway towards ultimate monetization, your customers will not be able to get the services that you really intend to offer to them over long periods of time. So let's say I create a great fintech app towards investments, and I keep offering direct code mutual funds, and I'm just taking one example, with no end in sight that ultimately how will I end up monetizing a customer. Sooner or later, if I'm dependent on external capital and a situation like this comes where external capital stops, because the questions now are not just on how many more customers have you onboarded, but what's your near side runway on profitability. At a point in time, I'll have to either pivot to more monetizing models, in which case I would have sold a different proposition to a customer and then giving something else, or I'll have to shut shop. So I think ultimately the questions are now veering towards, are you building a sustainable monetizable platform, or is it just about top line traffic growth? So I think the extra questions are more around how strong your sustainability of your business model is. I don't know Nirav's point.
I completely agree with Srikanth. I think also investors, for the first time in the last 5 years, are really asking, how are you looking at profitability? How soon will you get there? What are you going to let go? So how are you managing cost? They're questioning whether your business has any lifetime value beyond you. So and the direct, it's an interesting question if you think about it, because you see a lot of startups which are very founder focused and founder run, and the founders are driving the passion and the energy and the strategy and everything. Now investors are asking, what does your leadership team look like? If you weren't there tomorrow, will the business still sustain? Will it grow? So I think these are all fundamental questions that should have been addressed to start with. So why, it doesn't come as a surprise to me now. You see, the point though is that there was so much capital available and competition amongst investors to chase deals, and the Me Too, the FOMO syndrome, if you may, that you saw a significant amount of capital being thrown at junk ideas and junk implementation plans and execution. So that has corrected, which is great for companies who are really focused on growth and value. And I think investors have started realizing that.
That's great to know. So effectively what you're saying is, although we have a funding winter, it's actually giving rise or allowing businesses with sound business plans, sound sustainability, and looking at the customer lifetime value to succeed better as compared to, as you said, junk plans and junk business models.
And you are going to sort of eliminate companies that didn't deserve to be there in the first place, and the real winners will emerge. And that's great for the real winners, right? And then you have a lot more capital at play for those sets of people. So I think it's a great time to be a good business.
Yes, definitely. Piyush, you service a lot of fintechs through your firm, ESDS Software. Have you seen any changes in the strategies or the initiatives that fintechs are taking now as compared to what they took roughly a year ago?
Yeah, so ESDS itself was born in Siberian winter, I would say. So and in a city like Nasik, where no one would think about investing in an IT company in 2003. So 20 years back when I started, no one thought about. So I knew very clearly that we have to earn and then put our money, as Nilesh mentioned, that make business profitable. We were right from the day when the focus was to run the business in a profitable way. And that is what I advise. There are a lot of startups whom I keep on coaching, and I tell them to purely focus on profitability. One thing that happens, like if you are born in good, like your business is born in good times and you've had a VC funding, so obviously the focus is to again and again go back to external investors. And at some point of time, that has to stop. Because after a certain point of time, investors think that you have become habitual to that kind of money coming into the company, and then they don't want that money to come again in the company. So your existing investors themselves will stop you from getting any external funding. So it is very important to start focusing on profitability. Now I'll ask a question to all the people sitting here. Now, how many people sitting here think that Indian customers don't pay well? How many people think that compared to, okay, so there are some people who think. Now let me tell you that Indian customers, if you, as a fintech, if you go to the Indian banks, Indian NBFCs, you will be, obviously you think that, okay, I have to give this quality service, that quality. Every organization, every fintech has an aspiration to give high quality service. But you will be put against reverse auction. And in some cases, I have seen biggest of the banks running reverse auction for 2 days and 3 days. So the founders, the directors, all are awake till 4 a.m., 5 a.m. for 2 days, 3 days consecutively to win a certain deal. Now, what is going to happen in that 2 days, 3 days of reverse auction? Someone is going to bleed. So you have to focus on going international. So a lot of my fintech partners, they are focusing on international. They are generating their numbers from abroad. And that is what is helping. So all the profit that is going to come from your international customers, whether Middle East customers or African customer or someone in Europe, you can target those kind of geographies and generate some numbers, get some profitability, and then put that profit in the domestic market. Because in this period, in this season, the domestic market is not going to give you profit. So obviously then you will hit the end of the tunnel. You are not going to see the light at the end of the tunnel. You will probably, that light is of a probably engine coming in the tunnel. So you don't want to end up your business in that kind of a situation. I've seen a lot of fintechs going in that direction. And I would definitely not like to name any of those, but that is what would happen if you do not think of, if you do not have an international strategy. International strategy is very, very important. And something that has always worked for Indian organization. What has worked for? If you see all the top 5, 6 Indian IT companies, who are they? They are doing body shopping business. So doing that is also very important. So I'll share an example. When Mudra Yojana happened, so SIDBI officers are here, and I would like to share this case study with everyone here. So we were invited for the Mudra Yojana opportunity. So Prime Minister was regularly making an announcement, Mudra Yojana, Mudra Yojana, Mudra Yojana, and no one initially understood what was Mudra Yojana. We got invited by SIDBI that can you do this? We have to deliver this project in 1 month. And we said, fine, we are agile, we are ready to do anything. We had no clue what was to be developed, but because Prime Minister was forcing SIDBI, SIDBI forced us to do it, we agreed to do that. And today, let me share with you the stats. 44 crore loans have been disbursed in Mudra Yojana. 30 lakh crore rupees of capital disbursed to people in India. 44 crore loans have been disbursed to that platform. So that agility comes when you are ready for that body shopping opportunity. We had no clue, went there, deployed our developers, and today that platform has become so big. So that is also very important. You cannot be rigid like a large BFSI organization that no, we will not do this. Smaller opportunity, get started and generate some numbers, good profitability, and put that profit into making some product. And if you are making products, your product should be targeted for international customers immediately, because that is where you are going to generate some good profitability. And this is not the time to do a lot of capex, and this is the time to optimize your OPEX. OPEX doesn't mean that firing your people. I have always seen that the biggest of the companies make this one mistake, that they start, okay, we are going to remove 5,000 people, we are going to terminate 500 people. That is not something that will work. So many senior people I have working in the biggest of the NASDAQ companies, biggest of the BSE, NSE companies, they are sharing their resumes with me. And they are saying that, Piyush, we are seeing that 20% people are going to be fired from my organization, I want to leave. The performers are wanting to leave because such announcements are coming up. So do not lose your good people. You can optimize a lot of other costs. Now, so many people go on a big public cloud, a very popular brand of public cloud, and it starts with 5% of your revenue, and eventually your cost would go up to 25-50% of your revenue. You don't want to lose that kind of capital. Month on month, you are getting billed that kind of money. You have to revise your public cloud strategies also as a fintech. And CapEx, strictly cut down on your CapEx. There is no need to make major capital investments now. That opportunity would come when you will have a lot of money, a lot of cash of your own. And if you have reserves, put CapEx from your own reserves, not from someone else's money. Do not take banks' money or do not take external investors' money to put into the CapEx. That is something which is going to hurt your business big time. So that's it from my side. I'll come back again on a few more points.
Piyush talked about having flexibility and controlling costs and capex as one of the strategies to survive this winter. Would you agree with this, Nirav?
Well, I certainly would agree that conserving capital today is very important. Rationalizing cost would be extremely important. Baby steps would make more sense now than trying to take giant leaps for incumbent fintechs or startups. That being said, I think, one must continue to invest in what's your core offering, right? Mm-hmm. So you can't take away, you can't ruin your customer experience by not continuing to invest in what your core offering is. What you can do is restrict yourself from doing things that are not core to you or experimental till such time that you are more comfortable from a capital fundraise perspective. I may or may not agree with the whole internationalization idea and that the Indian customer doesn't pay. But that being the case being that if you are very focused on India, your entire resources are in India, I think at this point trying to do something global without thinking through the ramifications of capex there is challenging for any company to do. So there's a significantly large fintech opportunity in India, and nobody has captured even 1% of it yet. So, trying to go and replicate those things in other markets is a tough call. I mean, it's a lot of investment, it's a lot of work. So I think it's prudent for us to kind of continue to focus what's important, where our core strengths lie. So I think, about that. And start honestly looking at things like how much of my revenue is recurring monthly, what is my visibility on revenue in the next 3 years from a particular customer, and things like that. And I think that's what makes sense.
Yes, so I'll add to what I said. By going international doesn't mean that we put our people in Uganda or Mongolia or any other location, but identifying local partners. Sitting here in India through LinkedIn, it is quite convenient to identify local system integrators and connect with them. And if you have a proper digital marketing team, you will generate inbound leads. The local partners sitting in those countries might come to you and they will say that there is a bank in Kenya, wants so and so service in Kenya. Can you do this in Kenya? And you can, because you are an agile organization, you are an agile fintech, you can definitely go and grab that opportunity. You don't have to put any capex. All the capex would be put by that bank in Kenya, and that partner would take care of all the other things over there. You just have to provide your software products or your solutions which would go there and which would be deployed by that partner over there. So that is something that can be a very simple international strategy. You don't have to put a lot of effort in doing that.
Speaking of building something new, Srikanth, you are heading Kotak Wealth Management till a year and a half ago, and now you are heading the digital version of the same. Now, as we are speaking before, wealth management even now is not a fully cracked, in fact, it's not at all cracked at all, in my opinion. And when the market is so uncertain and dynamic as compared to other parts of fintech, such as lending and insurance, how do you design or how do you look at the metrics that you would like your product or your firm to improve?
So, Nilesh, the core of how we believe something like an invest-tech solution can be built is first understanding that it's fashionable to say that technology can solve everything, but one needs to be clear that in which part of the business is technology an enabler, and in which part of the business is technology the real horse which is pulling the cart. Now, in domains such as invest-tech or wealth-tech or even broader fintech, at least the internal golden metrics that we have is that the golden mean is equal measure of fin and equal measure of tech, which means you cannot just be a tech company doing outstanding UI UX, doing outstanding customer engagement, doing outstanding reward gamification and online community building, but not have enough domain capability, because what does happen in the world of investments is markets goes through multiple different motions, right? Now, if for example in today's market, if somebody were to just come and talk about equity as a product, and I don't want to be quoted out of context, I'm just giving as a broader analogy, maybe the right context right now is, since the fixed income yields are so attractive, maybe one just locks their money into a 7.5% bond rather than moving into equity when the markets are so uncertain. Now, and there could be many, many such examples. So where we see the opportunity as far as Cherry is concerned, and as far as actually all wealth techs are concerned, is there are outstanding tech companies trying to solve for user convenience, and there are outstanding domain companies who know exactly what to call the market but are not able to expand their distribution or reach, because without embracing right amount of technology, your cost to serve economics just does not feel viable. Now, if really you can get the two in the right proportion, where the investor is able to trust that I feel that this platform is talking to me, and you're able to embrace all the cool tools that tech companies have shown us, and I'm talking more D2C tech here, but at the same time, you are able to navigate the pitfalls of market and give the investor what the right financial product for the right time is, at some stage that's the only long-term sustainable business. Actually, for a long period of time, we believed that certain areas such as fintech, health tech, ed tech, these are areas where domain knowledge, domain strength is going to play a huge role. And we often quote this example, right? That if you have, and I'm talking of pre-COVID, if you had common cough and cold, of course post-COVID there is nothing called common cough and cold, but pre-COVID if you have common cough and cold, you would be very okay if your friend just came and said, just log on to this app and there is a doctor sitting in some parts of India and he'll prescribe you a paracetamol and you eat. Because you know it's a very commoditized advice that you're going to get. But try telling the same friend of yours to log into an app when he feels that he's got 2 arteries blocked. He's not going to do that, right? He still wants to go to a doctor who's performed surgeries after surgeries, who's experienced enough, and that is exactly what financial services is. That it is not just enough by giving you loyalty points to come to the app and redeem those. It is not just enough to build a midnight portfolio where at 3 a.m. you feel great toying the app. It's equally responsible to tell the investor that avoid this product, do this product for your age profile, this is the right thing. So I think for us, if we can get this right, it's not an easy thing because ultimately some of these things happen over a period of time. But if we can disseminate equal measure of domain strength, which coming from a house of financial institution like Kotak and many others will have similar thing, and some of us in the leadership team having done 15, 20 years of wealth management, and equal measures of tech by getting not the incumbent project managers, but by really getting high quality front end and back end engineers and doing what fintech companies have shown us, or the tech companies have shown us the right way to engage customers. I think there are huge opportunities to be done. And I'm of course talking here only for my niche within fintech, which is largely to do with investments as a space.
That's great. So you're quite clear that the existence of domain knowledge is now a key enabler or a key success factor for fintechs who wish to build, in your words, a sustainable business model for the long run with very high customer lifetime value.
Yeah, and this has nothing to do with funding winter or funding summer or funding autumn, because this was always the case that we were clear that one thing that you have was domain. Why give it cheaply and why just follow a trend. So we said we will own very dearly what comes naturally to us, and we learn very dearly what doesn't come naturally to us, which is what tech companies have shown us. And it is extremely crucial for me to note that without us learning the tricks of trade of how to engage customer, there's nothing much that we could have done. So it's both are in equal measures. It's 50 domain knowledge, 50 tech, and that's how we try to create some of these solutions for investors.
True. Speaking of domain knowledge, I mean, a lot of the domain knowledge here exists in what the regulator calls as regulated entities, and the spirit of the regulations by now are fairly clear to all of us that fintechs are expected to partner with regulated entities, banks, NBFCs, so on and so forth. So Nirav, you have had a good partnership equation with multiple financial institutions. You mentioned that less than around 1% of your total volume that you do is your book. Most of it is outside. How has that experience been, and how do you see it?
Our entire business, it's been fascinating. Our entire business is built on the fact that fintechs and banks coexist and complement each other, and we are a great example of that, being realized. We've always maintained that there are strengths and beyond the balance sheet that a bank brings, and then there are strengths that a fintech brings, and like Srikanth rightly said, this is a combination of domain and tech coming together and showing you what's possible exponentially. And I don't mean to kind of advertise Credable, but just to put things in context, we do close to 4,000 crores a month in disbursement. Less than 1% is on our own NBFC. Everything else is through the likes of Kotak, Axis, etc., right? So 35 odd financial institutions. And banks have started embracing technology and embracing fintechs who provide that technology, which is why there is so much success that we've experienced in licensing our tech platforms to, again, the likes of Kotak and Axis and everybody else. Because they've started believing, and rightly so, that the strengths coming together will create exponential growth for both the partners and a significantly supreme customer experience. So our entire business model has prospered and continues to grow because we have a go-to-market partner in a bank or a financial institution.
Yeah. Srikanth, you are heading one example of, the ultimate level of what that partnership could be. You are a part, it's Kotak, a traditional firm, and now you have an entirely digital unit headed out with new ethos and etc. Could you comment on your experience, like 2 to 3 years ago, as you saw the changes in the industry, fintech that was happening, while you were heading the traditional wealth management business?
No, I'll actually take one part of your question first, which is on how since it's a regulated industry.
Yes.
See, it's very evident to point out that I think the way regulators in India, especially on the landscape of fintech, have laid the lay of land, or laid the map of land, is second to none in the world, right? What UPI has done, I don't think anyone in the world understands that how a public infrastructure has created payments which can actually be so commoditized and truly financially inclusive in nature. The other example that we were chatting in the corridor before this panel discussion was the introduction of what we call as account aggregation. I'm sure Nirav's firm will be working towards closely chasing that. Now, what account aggregator does now, when we speak to people in other parts of the world, they haven't either, things like UPI is offered either by private companies, account aggregation is not heard of. There are technology companies trying to solve for data dissemination from one user to the other. But look in India what has happened. What account aggregator does is at the heart of that regulation, and RBI has already embraced it, SEBI should soon embrace it, IRDA is on its way to sort of embracing it. Once account aggregation in India goes live in full gusto, you are actually putting the ownership of data to where it belongs, which is to the user of the data. Otherwise, everybody, right from banks to mutual funds to RTAs to custodians to demat accounts, everybody would claim that this data is theirs. What this regulation essentially says, data belongs to nobody but to the investor. And on top of that, they have given licenses to account aggregator players who again are not going to either store or custodize data. Their job is to create pipes, which is essentially going to take data from the banks or mutual funds, give data to, let's say, in other financial service providers upon the consent of customers. I'll give you 2 examples. Now, I am a customer with, let's say, a bank for the last 20 years. The bank can see exactly what I've done for the last 20 years because my bank statement is there. Do I smoke? Do I go to the bar every week? What is my lifestyle habit? Do I pay my credit card bills on time? Do I buy when markets are high? Do I sell when markets are down? They have every data. But what doesn't come naturally to them is to use this data, massage it, and use it for personalized use to the customer. Now with advent of account aggregation, if somebody pulls this data, uses high quality data science, and looks at this data and comes to you, Nilesh, and says that, listen, I have observed a pattern that you always pay your debts 2 days in advance, and you are a high quality customer, let me offer you loan 50 basis points cheaper than what markets give you. Or you are a customer who in your life have never done anything except fixed deposit. Now, if you are a customer for 20 years, never done anything for other than fixed deposit, and the first landing page on something like Kotak Cherry is futures and option, you are never going to come back again. Now, use account aggregation, give a very personalized user experience. So I think these kind of tech stacks that are being created by public infrastructure, this thing, is for me a pivotal moment of how financial industry itself can shape, fintech or no fintech. Of course, you have to use tech to do it, but the opportunity is right there for both incumbent players as well as new age fintech players to use some of these public infrastructure and improve the services for the end consumer.
Exactly. In fact, as an aside, one of the most interesting things that is truly differentiates Indian fintech from fintech abroad is the existence of these, which we now call as digital public infrastructure or digital public goods, which you see, which are no assets per se, but these are just protocols, which are hosted by a regulated entity in the case of RBI, for UPI as this, and there are several others which are coming across. Not just that, and just to add to that, the Ministry of Finance has made it clear that any regulated entity which falls under one of the 4 financial regulators eventually has to connect to the account aggregator, plus GSTN and ITD. So at one shot we have, as Srikanth was saying, one shot we have a complete profile of an individual available at the consent of the individual to be shared.
Absolutely.
Now, that is truly revolutionary. Piyush, in your experience, how are fintechs shaping up well to these new challenges, particularly from the perspective of a lot of the core work being done by the government or a regulatory organization, so as to say? How has been your experience in this field in dealing with your clients?
Yeah, so basically the major problem of an entrepreneur or a startup or any fintech organization is that we get stuck up against certain regulatory or we get stuck up against a competitor. There is some competitor out there doing something and then they have a scale, they have an advantage and they participate in the larger opportunities, 300 crore opportunity, 400 crore opportunity, and then you wanted something of like 3, 4 crore, 10 crore out of it and you cannot get that. You are not getting those opportunities, and then those systems are set that okay, larger banks will come up with requirement to only onboard larger organization. So here we have to look out for partners. So we have identified ways, and this is a perception change. A person has to change their perception that when such a situation arises for you, go out and shake hand. Whoever is your biggest competitor in the market, it doesn't take any time for you to go approach them and talk to them and shake hand with them and collaborate with them, because they make life easy for you. All the issues that you experience as a startup or as a smaller organization, smaller fintech, would go away if you get a good partner. But like if you go and surrender to a bigger partner, they would want to eat you up. Immediately that bigger partner would not entertain you. You have to take something to them. So if you have your existing relationships, take those existing relationship to them, that okay, I have existing relationship in the #1 bank in India or #2 bank in India. I am doing something very small over there, but I can take you along with me and give you something bigger over there. So that would probably encourage that partner to collaborate with you, come with you. But in some cases, I have seen that that doesn't work. They'll still go and do it themselves only. They'll not take you along with them, even if you want to shake hand with them. Then you have to play like Ukraine. What you have to do is you have to get bigger international partners who will fight against your local competitors, and then they will allow you. And that bigger firm, that bigger American firm or the European fintech firm would bring a lot of capital also. They have aspiration. Everyone is now looking at India. India is a gold mine. India is an opportunity. Everyone wants a share in Indian market. They will come here, there, and this has actually happened in our case. We've partnered with some big international giants, and they come here, they help you, and they are good paymasters. They take care of your bills immediately. Within couple of hours, within couple of days, your payments get released. And then the bigger local competition that you had, who was not entertaining you, or all the regulatory challenges that you had, those challenges would easily go away. So this is something which we have to identify. And again here, Nirav, I would like to point out that it is through the inside sales team or digital sales team that we can actually reach out to this kind of partners internationally. They all want to be in India. The French government companies want to be in India, the UK government companies want to be in India, everyone wants to be in India. You just have to reach out to them.
Indeed, collaborate rather than compete seems to be the new mantra. I'll take this opportunity to ask the audience if they have any questions for our esteemed panelists. Any questions, please?
So, actually, that's a very fair question. Very early stage, there are about 130, 140 banks, NBFCs who already sort of onboarded on the RBI side of account aggregation as financial information providers. There are two entities here, FIPs, which are financial information providers, and it is FIU, which is financial information user. But you know, actually what will happen is, I think once SEBI also comes around with it, there is already a use case that is established in lending. There will be use case which will be established in financial investments. There will be use cases which will be established in insurance. As use case gets better and better, as the messaging gets better and better, the adoption is a given. I think I know of at least so many fintechs, more on the SEBI side or the capital market side, who are just waiting for this account aggregation to be adopted. They've already created some outstanding use cases of how they can give investor either pricing advantage or solution advantage or advantage in terms of personalized advice. So I think it's early days. I wouldn't be too discouraged with it. Your question is right that we're still not seeing the kind of traffic that one would have believed. But look at how payments also happen, right? I mean, you require catalyst. You either required a demonetization kind of an event, or if you look at what happened during the time of Paytm, at the time when Uber was a big catalyst for Paytm moment, because when we had a two-step authentication requirement, is when the adoption of Paytm during demonetization is also when the adoption of Paytm happened. So I think the stack is there, the use cases are getting built, regulators is getting ready. It's a matter of time you will see hockey stick adoption, but I think we are very confident. We are already there as FIPs, we are already providing data. In Cherry, for example, we have already built use cases for FIUs. As investors will see the benefit coming out of it, you'll see more and more users providing consent for the data to be used.
Anyone else?
Cherry, thank you.
Okay. Thank you all.
right.
Thank you all for giving. Thanks to
Thank
panelists.
you.
It was really a fun talk.
Thank you. Thank you,
Thanks,
everyone.
thanks Nilesh. Thanks, Nirav.
Thank you, gentlemen. May I request you to please stay on stage as I invite Mr. Vipul Oberoi, Director Marketing, CSR and Learning Solutions, DNB India, to present a memento to our panelists and our moderator. Mr. Nirav Choksi, put your hands together, ladies and gentlemen. Mr. Srikanth Subramanian. Mr. Piyush Somani. And Professor Nilesh Gupta. Thank you, Mr. Oberoi. Thank you very much, gentlemen.